We like to say internally that there are many consumer platforms with hidden fintech unicorns within them.
For example, take the Amazon ICICI card. It's a very successful example of embedding a fintech product into a consumer distribution pool.
Embedded fintech is basically seamlessly integrating financial products, which could be payments, lending, insurance, or wealth products, into a non-financial consumer platform.
We think almost 450 million odd consumers will get touched by embedded fintechs looking at FY30. We think this is going to be anywhere from 10 to $15 billion of revenue pool sitting across these different islands of distribution.
We believe that a lot of these platforms have several significant structural advantages. They have higher reach. These platforms have superior engagement to anyone else.
For the distribution platform itself, embedding a financial services product has a significant delta on retention, engagement, and then hence revenue and top line.
Fintech is something that almost every consumer tech company that is large needs to start thinking about in terms of its roadmap. What's behind the thesis of this sort of an assertion? I'm telling you in 2 minutes, the laptop will come out and then I'll be reading from the... Hi, and welcome to yet another episode of SummitUp by Elevation Capital, a series where we talk about the emerging themes and opportunities within the Indian startup ecosystem that excite us, and our thesis on how we see some of these play out in the coming years. Through the bottom line series of reports, our fintech practice has put out a series of reports on how we believe there is a $400 billion value creation opportunity in India in fintech, and these spaces and themes where some of these opportunities lie and can be exploited by budding entrepreneurs building in this space. One such space is embedded fintech, and today I have Vaas and Kshitij with me from the fintech practice team to get a little bit deeper into this space. Welcome to the pod, guys.
Thanks, Vishy.
Excellent. So let's get started. When I was researching for this piece and I saw that the topic was embedded fintech, it just sounded really arcane. And I've done an episode on space tech and this sounded a little bit more complex than that. But when I read through it, it seems a lot more intuitive. So just to help decode for our listeners a little bit, what exactly is embedded fintech?
Sure. So I'll take that, Vishy. So embedded fintech is basically seamlessly integrating financial products, which could be payments, lending, insurance, or wealth products, into a non-financial consumer platform. Now, these consumer platforms could be your e-commerce players, it could be your ride-hailing platforms, it could be your food delivery players, anywhere where consumers are transacting digitally today, right? So today, users are very well adapted to using these digital platforms. And by providing access to financial services products there at that point, it can significantly enhance the user experience. Let me give you a very simple example. For example, if I'm booking my cab today, when I choose Ola, I have the convenience of using Ola Postpaid, which removes any friction in booking a cab, right? So that's essentially a credit line embedded into the Ola booking experience. But for example, sometimes when I book Uber, I need to clear my past dues. I need I need to load my wallet again and book. So some of that friction exists while booking the ride, which makes a big difference in which app I use, right? And to just substantiate that further, there are many large examples of consumer platforms today or online retail platforms who have already leveraged the power of embedded finance. So like we like to say internally that there are many consumer platforms with hidden fintech unicorns within them. So for example, Starbucks has almost more than $1.5 billion deposits, right, in their cards, which makes them equivalent to one of the top 15% US banks now. So multiple examples are already live in India. For example, Amazon does a good job of this with a co-branded card with ICICI. They have buy now, pay later options embedded with Axio. They have multiple insurtech products that they have created and protection products created with Acco. So we have Amazon as an example. We have Ola with Ola Money, which I told you in the previous example. We also have Make My Trip with Trip Money for Forex. In our portfolio, we also see Spinny, who started Spinny Capital for financing. So we believe a lot of these platforms exist, and this trend is just gathering momentum in India. So if we look ahead to 2030, we believe there will be more than 700 million online transacting users on these commerce platforms, right? And when I say commerce, it's like broad online retail. and these users are expected to spend more than $500 billion in 2030. So adding a lot of embedded finance products to these spends can be a big value unlock for many platforms.
See, and if you also think about this, financial services is one of those few retail categories where the manufacturer actually does a bulk of the distribution. If you think of most other retail categories, typically these are unbundled. We're starting to see that happen in financial services, but we think this unbundling of manufacturer and the distributor will start to happen more and more. And sort of as the story plays out over the next decade, we think one, it creates opportunities for a bunch of consumer islands to build financial services within them. It also creates a large opportunities for companies to power this infra, which is software and products that are needed to power this infrastructure, power this embedding to happen. See, also when we look at it, we think almost 450 million odd consumers will get touched by embedded fintechs looking at FY30. We think this is going to be anywhere from 10 to $15 billion of revenue pool sitting across these different islands of distribution. And there is another $5 to $7 billion of infra tailwinds and opportunities that this will create. So overall, very large. And if you take a more macro view, it becomes very apparent to say this has to get unbundled a little bit more over time.
Excellent. So embedded fintech in a way is if Uber was able to give me a buy now pay later on my Uber cab ride from Bangalore airport to home because it is so expensive now, right? Excellent. So I think one of our core assertions is that as you were saying, there is potentially fintech unicorn sitting within a lot of consumer tech companies. But fintech is something that almost every consumer tech company that is large needs to start thinking about in terms of its roadmap. What's behind the thesis of this sort of an assertion?
Yeah, so I'll tell you that we believe that a lot of these platforms have several significant structural advantages. So four specifically, right? So one of it is they have high reach. So if you take messaging apps today, they have more than 200 million monthly active users. E-commerce apps have more than 175 million monthly active users. Mobility apps in India have more than 30 million monthly active users. So they have access to large number of users. Second is these platforms have superior engagement to anyone else. Users today spend anywhere between 10 minutes to 40 minutes every day on each of these apps, right? So they already have the customer's attention. There is a growing trust among users with these platforms because they transact so much with these platforms already, right? And further, these platforms also have access to proprietary data on the user, which could be your browsing behavior, it could be your purchase behavior, it could be verified addresses, it could be the payment mode preferences that you have, all of which can be used to build more contextual financial products for you, right? So, and combining all of this, there is also a tailwind to say that these platforms also have an imperative to build more of financial products and embed financial products because it again improves user experience and it also creates large revenue and profit pools for them.
See, and also if you think of the three stakeholders in this ecosystem, right, which is the manufacturer, the platform on which this is getting embedded, and the end user, it feels win-win for all three of them. For the distribution platform itself, like one, we have seen typically embedding a financial services product has a significant delta on retention, engagement, and then hence revenue and top line. For example, we have seen platforms where consumers have a significant attach rates on the credit card product, for example. Their month 12 retention could be 10 to 12% higher. And that's actually quite significant if you think about the impact it has on the core business itself. Second, it can be a very significant ARPU driver for the platform. Again, taking the credit card example, you can make anywhere from $10 to $15 per annum directly hitting your bottom line largely. Or a PL product could give you a 2-3% take rate, an insurance distribution product could give you a 20% odd take rate. So again, significant impact to both bottom line and to top line. If you think of the end customer, it is always a more delightful experience to have it contextually delivered to you at the right time. You're better off buying a phone insurance at the point of checkout rather than going separately and buying a attached sachet product for this. And finally, for the manufacturer, again, it is just another pool to distribute to, another place to go and get your customers. So it's win-win across all three dimensions, and hence we see each of these pools will significantly expand, right? So when we look at lending, we think it's about $1 billion revenue pool today, which is getting embedded. It should grow at least 10x the way we see it. It's just one of those products which beautifully lends itself to getting embedded. Think of insurance. Again, it's about $1 billion of GWP going through embedded channels. We think it'll be $4-5 billion. So I think across the board, whether you take, payment has been one of the first things which has gotten embedded very deeply. But you look at lending, you look at insurance, then you start looking at wealth and other products. It's only going to accelerate very significantly from here.
Great. So, as you were saying, I think lending, payments, credit, there are a lot of contexts in which fintech can get embedded. How does a large consumer platform think of in terms of a framework, in terms of what context can they embed fintech into their overall platform?
Yeah, Vishy. So embedding fintech is not a one size fits all story, right? So your conditions for success and impact can vary by product. So it really comes down to whether like what you want to solve for, right? Now, if you want to embed lending or insurance or wealth or any sort of differentiated credit offerings or payment products, it depends on whether you as a platform want to increase average revenue per user. Do you want to improve the trust that your users have with your platform? Do you want to improve the stickiness of the users and long-term retention, or is it something else, right? So that those are some things that you'll have to consider before going into this journey, and it's not a one size fits all.
Can you help bring this to life for us by double clicking on a few categories for us?
Maybe let's pick credit. See, I think there's numerous products you could do as credit, right? Like you could do a BNPL product, you could do a co-branded card, you could do PL, you could do loans to the merchants or the suppliers on the platform. And what you choose to do is actually very dependent on your context. So BNPL is one of the most hygiene or simple products to do. It works when either you have a very high ATS category, but affordability is a concern. Think of Spinny, people buying cars on them. It's definitely helpful to have a product there, a credit product, which allows you to solve for the affordability problem. Or when there is a low ticket size category, but it's a high frequency category, then again, BNPL solves for convenience. Think of what Amazon and Axio are doing together at checkout. That's another beautiful example of just convenience getting sorted at that stage. So BNPL works in that context. And it is usually a very significant impact to the top line of the core business. Think of something like co-branded cards. It works typically when I think there's high consumer affinity to the brand. The category by itself lends itself to categories where consumers value the rewards in that category and a few other aspects like that of the underlying platform. But if you can get this going and get this working, then it does an impact both on your top line and your bottom line. For example, take the Amazon ICICI card. It's a very successful example of embedding a fintech product into a consumer distribution pool. About 5 million cards are out there today. You look at any metrics of the card, whether it's activation rate, spends, which are about 1.2x the average of a typical credit card spend. It's quite evident that it's working both for them in their underlying category and also in sort of generating revenue for Amazon itself. Then the third place you could go into is to look at merchants or the supply side of your platform and to say, what can I build for them? That typically becomes relevant when you have supply or merchants who rely on you or for whom you're a very large share of wallet of their income, because then you understand the customer a lot better and you're able to underwrite them a lot better. So those are some nuances. I think there's 4-5 things platforms can choose to do, but what they choose to do depends both on what is their inherent nature of the platform, what category they're playing in, what objective they're solving for. And that's how you sort of make that choice.
So let me double click a little bit on insurance. So historically, insurance has been more of a push product requiring consultative sales. It requires a large field force to distribute, etc. Right? But in certain form factors, we believe insurance can also lend well to embedded finance. And it could be in 3 ways. So one is more contextual products. So for example, wherever there is unpredictability in service quality or delivery, these kind of products can come in very handy. For example, in logistics, in travel, in time sensitive delivery, you can attach contextual insurance product to secure against any sort of delays or any damage to goods, etc. Second, wherever there's high customer recall of a particular product, for example, motor insurance, which is required by everyone who owns a vehicle to have motor insurance, right? So that can be embedded directly into these platforms to say that, okay, let me go buy my bike insurance from PhonePe, right? Third, wherever platforms could have large distribution base of businesses, like especially SMBs, you can also add on any sort of business insurance which can be relevant. So it could be like fire insurance, it could be any liability insurance that business need to buy, or it could be any export or marine insurance that businesses need to buy, right? So those are three examples where you can embed insurance products into the flow. Now, globally, there has been a very interesting example of Zongan, which has done this very well. So this was a company incubated by Alibaba, Tencent, and Ctrip, and they have some of these contextual insurance products like insurance against grocery freshness or insurance against damage caused by beauty products. So they have gone like very deep and co-built some of these products for the consumers, right? In India also, we are seeing some of that emerge. So Acco, for example, does this very deeply with Amazon. So they have a lot of extended warranty programs in terms of protection plans. They have screen protection plans for phones, etc. And we'll see more of these emerge over time.
Very interesting. Looking at how complex and evolved the Chinese ecosystem is, I think it's time I started adding that phone screen protection at least to my cart whenever I buy a phone. I know the team also has a point of view on the embedded financial services opportunity in infra. Can you elaborate on that a little bit?
See, I think it's one of the strongest tailwinds driving people to rethink their stacks across financial institutions. See, one is there's a very obvious middleware or an aggregator opportunity, basically to say there are manufacturers, there's a bunch of these distribution pools, and can I be a middleware or can I be an aggregator on either side? So that opportunity feels obvious, and there are a number of players solving for different categories. But also, I think this is a very strong tailwind where it has both impact on manufacturers' core systems, whether you take a policy issuance system, whether you take a loan origination or a loan management system or a CBS or whatnot, because suddenly you're having to connect with so many different people, deliver superior customer experiences. So it is one of the strongest tailwind where people are saying my legacy systems, which are not API first, which are not cloud first, which are not modular, just don't work. So let me rethink my core systems. The good thing which is happening are there are a number of banks which are happy to think of a dual core, to say I have a certain core running internally, but for most of my embedded or partner-led work, I'm happy to use a different core. Or a concept of a hollow core where your core becomes more a system of records and a lot of the experience layer, etc., sits as a meta layer on top. And that again allows a lot of companies to build that piece of the software. Finally, I think it's also a very strong tailwind for a number of point solutions. Think of something like reconciliations or dispute resolution. Suddenly you have so many partners you're working with, they are sending you data, they are sending you disputes, and you have to deal with all of this fast, compliant, and in a tech-driven manner. So again, a lot of these legacy systems sitting in these different point places will also see strong tailwinds for getting replaced.
Super. So maybe just to wrap this up, I think given where we have sat over the past few years with our unique vantage point, we've seen a lot of our fintech companies and a lot of our consumer brand companies sort of build some of these embedded fintech solutions within their stack, right? What are some learnings that you guys have observed that you think would be useful for anybody who's thinking about this space?
Yeah, let me share a couple. So one, I believe, is that modest scale of platforms can also be good to start embedding financial services products, as long as you think through the user journey and if the product fits the user journey well, right? So there is a myth that you need a lot of scale to start embedding financial services products, but we believe that even if you have modest scale, you can start doing this as long as it fits into the journey of the consumer. The sort of flip side to that is also that scale doesn't guarantee success, right? While you can embed financial services products into your platform and it can improve the customer experience, you still need to invest into building capabilities internally, which could be that you need good quality data on the consumer to understand what products to build and serve. You need to invest in servicing the customer well. You need to invest in compliance, risk, any form of collections, etc., to execute this very well. And only then you'll start reaping the benefits of additional revenue pools, profit pools from financial services.
See, the other thing I feel is usually for the success of this partnership, which is between, let's say, a bank or a manufacturer and these distribution pools, typically intent is never the problem. Typically, commercials are never the problem. They get worked out over time. Finding what the right experience or co-creating a right product, again, typically doesn't become a problem. It takes its time, but typically you're able to do that. What ends up becoming both a rate limiting step and a big success criteria is how the infra and the piping is done. And are you really able to do that? Because sometimes you've seen everything is ready, but it takes like 6 months, 9 months, a year to launch. So one of the strong imperatives is, I think when these partnerships get built out, I think you think of partners who have the sort of right stack ready. If you are a consumer tech thinking of venturing into this, and it is significantly important, start to own some parts of the stack. And third, for new founders building in this space, I think it's an interesting place to double click and say which part of the stack is broken and start building something there.
Thank you so much, Vaas and Kshitij. I think this was a great conversation
Thanks, Vishy.
into something that was surely new for me and maybe for a lot of our listeners. I would urge you to go check out the Bottom Line series of reports where the team has spoken a lot more in detail about not just embedded fintech, but a lot of spaces where we feel there is going to be a huge value creation opportunity in India in fintech. Thank you.